The worst day on Wall Street in more than 2 years. The stock market fell 634 points today for a loss of approximately $2.3 trillion. As we go on the air tonight, markets around the world are reacting. Japan's stock market, the Nikkei, was down nearly 4% in the first hour of trading. As stock prices plunged, the finger pointing surged. John Donvan reports.
On Friday, we learned that the United States received a downgrade by one of the credit rating agencies.
Words just could not do it today. The president stood there trying to talk the nation, or at least the markets, into just taking it easy.
But here's the good news. Our problems are imminently solvable, and we know what we have to do to solve them.
But like a thermometer plunged into ice water, the Dow Jones average kept going down today, even as he spoke and afterwards, to close with a startling loss of more than 600 points, or in terms of lost wealth, $2.3 trillion. And while his goal was to tell us that there's a way out,
there are plenty of good ideas about how to achieve long-term deficit reduction that doesn't hamper economic growth right now.
But the question that remained unanswered was how, which is why the downgrade that exacerbated all of this was given in the first place. And the man speaking for the company that did that, he's not flinching.
No second thoughts?
About our decision? Absolutely not.
Standard & Poor's is sticking by its guns, having seen the political temper tantrum of the debt limit debate, lowering the American government's credit rating from its king of the hill status, AAA, which let us borrow at the lowest rates, down to AA+, which means that S&P's lost a little faith in the good faith and credit of the United States and in our ability to pay our debts down the road. Here in Washington, anger at Standard & Poor's is palpable, as it was all weekend on the news talk shows.
I think S&P's shown really terrible judgment.
Though almost proving S&P's point, the parties started immediately going at each other again.
I believe this is, without question, the Tea Party downgrade.
The president has no plan to restore the AAA credit rating to the United States of America.
The fact is, this bad sort of financial history was made on the president's watch, and so the White House was at pains to point out that bond prices went up today, which has the effect of holding interest rates.
The market has spoken very clearly against the judgment S&P made.
And literally, it was a judgment call. That's what Standard & Poor's does, among other things. They judge, like an umpire. Except in this game, it's not balls and strikes for the batter, it's financial stability and reliability. And at that, S&P says, the U.S. struck out. So what is this S&P, this private company with roots that precede the Civil War and whose clout comes from their role as judges of credit? Why does it and the agencies like it, most notably Fitch and Moody's, why do they have such power?
These companies have been around for quite a long time, and the paradox is that the government has essentially increased their importance.
That's because it's the government that issued rules requiring certain huge investors like insurance companies and banks to invest only in securities that had higher ratings, and somebody had to do the rating.
This essentially embedded the importance of these ratings in the entire investment arena.
Which is not to say their track record is perfect. In fact, as predictors of whom you can trust to pay back a loan or not, they've had some big missteps.
During the Enron and WorldCom crises, all of the ratings agencies performed woefully. They did not see those crises coming.
But the big one was 2008, the housing bubble, when healthy ratings were given to mortgage-backed bonds that turned out to be plenty sick. Is this to say that the ump needs glasses? The White House thinks so.
It is really breathtaking that S&P made an over $2 trillion mistake in their analysis that showed a fundamental misunderstanding of the most basic elements of the budget that we would even expect our interns to understand.
But now it's done. S&P has spoken, saying the real issue is that the political process itself seems to be broken, that the government will not be able to get the debt down, which again is a judgment.
They're predicting that it will not be resolved. They're predicting that these difficulties will continue. And so how do they know that?
But the fact is there is no answer to that question, and it doesn't seem to matter. Not when the Dow is down 600 points and wealth is down $2.3 trillion. And part of the reason for that is simply that the ump called strike three. John Donvan, ABC News, Washington.